This is Chanel Bunger with the Becker Private Equity and Business Podcast, and today I'm excited to speak with regular guest from RSM, Rick Kes, who joins us to share updates on economic trends he's watching. Rick, thank you so much for joining me today. Would you take it away and quickly introduce yourself and then tell us about some of the things that you're seeing out there?
Sure. Yeah, I'm Rick. I'm a partner at RSM. RSM is one of the leading professional services firms serving in the middle market. And with that, we serve a plethora of private equity groups and their portfolio companies in many different facets, from kind of core financial statement audits, tax, diligence, IT consulting, various other fashions. And glad to be part of the conversation and kind of talk through what we're seeing in the private equity market today. I think as a regular guest, my commentary typically revolves around things that within our group we're working with our economists on studying and making sure we understand how they relate to our clients. And, a lot of that comes down to really jobs, interest rates, and inflation. And, I think some of the messages that we're seeing, most currently is that, maybe some of the actions that the Fed has employed, like raising interest rates and things of that nature, have sort of cooled some of that inflationary concerns that we were, really, really anxious about, maybe 12 months ago. And so I think some of that has been really well received by the market and by just consumers in general, so that's good. I mean, obviously, some of the inflationary increases that we felt, 12 months ago, 18 months ago, haven't gone back to where they were before that time frame, but that inflation is cooling in its kind of growth rate, and so that's positive news. Jobs, I think, similar, that we're seeing some softening in the job market, which is good for employers. We're still at a position where there's far more jobs available than job seekers, but that number is continuing to kind of trend in the direction that, I think the Fed was hoping for, closer and closer to 1-to-1. Still that there are more job openings, more job seekers, more openings, more available jobs and job seekers, but that relationship is getting tighter and tighter, which is kind of a good indication that those interest rate increases that actually kind of achieve the goals that the Fed was trying to accomplish by kind of slowing down the pace of job growth in some respects. And we're also seeing some of those, voluntary turnover numbers trend slightly more beneficial towards the employer, which all those things, jobs really fuel growth. A lot of our economy in the U.S. is focused on the service sector, whether it's healthcare services or transportation or hospitality or food and beverage. A lot of different industry sectors focus, pretty heavily on the labor environment. So, without, a strong, vibrant capabilities with employers and kind of an employer-friendly environment, it's hard to grow. And, so hopefully that will kind of trend in the direction which will help our portfolio companies of our private equity groups grow in the direction that they're looking towards. Interest rates are still challenging overall, obviously, which are leading to maybe a little bit slowdown of capabilities of organizations to do acquisitions that they would like to do, or other large scale investments. But hopefully with some of these other indications from a macroeconomic perspective, we'll see some slowing of the interest rate increases, or some perhaps no increases at all for the next couple months, or beyond, which will obviously help kind of the feeling of private equity investors in making investment decisions, buying decisions, acquisition decisions, things of that nature. And then that relationship, the interest rate relationship with deal values, it's kind of unique in that, as interest rates go up, deal values sometimes feel a little bit of a pinch, because obviously, a lot of the transactions that are kind of created in the private equity group are highly leveraged and reliant on debt. And so to make the cash flow work, one of the levers to interest rates goes up is to reduce deal value. So, you have a little bit of a mix match between buyers and sellers' expectations on valuations. I think sellers are still in the mode of, hey, in 2021, somebody told me we were trading at 14 times EBITDA, and now they're telling me 10 or less than that, or something that is not meeting the expectations that were set based on, interest rate environments that were maybe more favorable to the seller. And I think that relationship, relationship between the buyer and seller is kind of, continuing to get slightly better as sellers are starting to understand how interest rates have impacted the deal environment and how that's impacted the valuations that they're receiving. But I don't think any seller is excited to realize that all of a sudden their company went from 14 times EBITDA to 10, which could be dramatically different kind of in the pocketbook of the seller. So, I think those are the main things that we continue to watch. It's jobs, interest rates, inflation, and, really tying that back to how that impacts our clients in the private equity space. And, just continue to kind of monitor those things and understand, as once we get to a point where, maybe at least there is certainty into where we are, maybe a pause on interest rate increases, maybe continued easing of job market, and maybe a continued slowing of inflation, then we'll hopefully see, even with depressed valuations, more transactions occurring. Because, from a professional services firm perspective, those transactions fuel a lot of our growth. And so, we are, very hopeful to see some of that deal flow come back into the last half of this calendar year, as well as, the early part of 24. So I'd say that's kind of the overall synopsis of what we're tracking and what we're seeing.
Well, Rick, thank you as always for keeping us updated on all these trends and for joining me today on the Becker Private Equity and Business Podcast. Thank you. It was a pleasure.
Of course.